Welcome back to Investing and Trading Live, sponsored by Trading Academy. I am your host, Josh Lilquist. On the last segment, we covered some strategies, or I guess we'll say the reasons why a lot of people are not consistently successful. A lot of it is because of the fees. They have fees that are being taken out of their accounts year after year after year, and over time, that does add up to a lot. And you don't really realize that. And they'll say, oh, you got a small 2% fee or 1% fee. Well, take 1% out of your money every single year in your checking account. See what that happens. See what happens to that. So eliminating those fees is key, but also not knowing the mistakes that you're even making. It's like one of those things, and there's a saying, you don't know what you don't know. That's actually true.
That's very true.
How to eliminate those mistakes, and then not knowing the rules is another reason why people sometimes struggle, is they don't even know the rules to the game. It's like going and playing a football game and you don't even know what a first down is. You don't know what when you got to kick a field goal or the analytics of the game. So we're going to talk about some different things on this segment here, but we had a lot of people texting in after that segment looking for reasons and strategies to be more consistent. So if you miss seats to that trading and investing class, simply just text the word investing to the number 210-210, and that's for 2 seats for a trading and investing class, local, by the way. We have these classes here in Bloomington, Edina, Wayzata, Maple Grove, Woodbury. We're all across the metro, helping people make smarter trading and investing decisions. You can also go to tradingacademy.com. Make sure to subscribe. For those of you that are listening to the podcast, you got to subscribe to that. We have a lot of followers. We're making this the global #1 financial podcast on the financial markets. Just go to Investing and Trading Live on Apple Podcasts, iHeartRadio, and Spotify. So, Al, with this segment here, we talked about the why people are not successful. I want you to discuss and give me some reasons, and then we'll talk about those things, about how you build consistent strategies with these markets year after year after year.
Yeah, and I think that word consistent or consistency is one of the most important words. If you're going to do this, especially if you're looking at, a lot of people want to do this as their full-time source of income or a substantial source of income for them. And in order to do that, you have to be consistently successful. That doesn't mean you're going to win on every trade or investment that you do. But if you let's look at a company like Goldman Sachs. We can go back to the year 2008. So that's 16 years from 2008 to where we are now. They didn't have one losing year. And that doesn't mean that their clients all did well, but they as a company, they did, and over 50, I think it's 57 to 60% of their profits come from trading. So they had a successful year for the last 16 years in up markets and down markets. And if they can do that, there's obviously a way that it can be done. And to be consistently successful, you have to be able to use something that gives you the opportunity to be right more than you're wrong. But more important than that is when you win, when you're right, you want to make sure that you make more than you lose when you're wrong. And that's all part of managing your positions. And we show you how to manage that, the capital part. Some people call it managing risk. But that's important. You have to be able to do that. And we show our students how to be able to identify trades that will allow you to not have to be right all the time. Maybe if you're right only 25, 30% of the time or more, you can still be profitable if you have that right reward to risk ratio. So that's one of the things that we do. We show you how to use the assets that are right for you, that are going to have you, follow the path that is going to get you to achieve your goals as quickly as possible. Once you start doing that and you see that it's working, it builds confidence, which allows you then to be able to do this in a way where you're going to realize that consistency.
So you mentioned you want to be able to utilize the right asset that is right for you.
Yep.
And these are vehicles. And when we talk about these vehicles, we're talking about stock or futures or options or Forex.
Right.
Well, how do you even know? Like, what are some of the things that you need to determine which one is the right one? Because you do want to have the right vehicle depending on where you're trying to go.
No, exactly. And as I mentioned before, there might be a path that's right for you that's not right for somebody else. And there may be 20 people in a class, and there may be 10 or 15 different directions that people should go based on their unique situation. And there are assets that are ideal for short-term trading, for generating income, and there are assets that are ideal more for building your wealth. So that's number one. What is your goal? Are you looking for additional income? Are you just looking at building and protecting a wealth portfolio? And those are the things that we start with, and then we build a plan based on that. And there are some things that people might want to trade just because they have more interest in it. And I think that's part of maybe helping you be consistently successful too, is using something that you have an interest in. Peter Lynch always used to say, he was the manager of the Magellan Mutual Fund. He always used to say, if you want to make some investments, invest in things that you know about. Maybe go to the mall and see which stores have a line in front of them. But there are things that you can do to help you not be average. Our students don't want to be average. Wall Street's not average. So how do you do this in a way that you can be better than average? It's using the same kinds of things that Wall Street uses. And people say, well, do you use fundamentals or do you use technical analysis? We use both. But the great thing on the fundamental part is that we don't have to do the fundamentals. The big players are already doing that. They have research and data that we don't have, that where we either get too late or we don't get it at all. A lot of these big firms, the hedge funds and the big firms like Goldman or JP Morgan, they know a lot of the CFOs and the CEOs of these big corporations. So they do get information that they can act on that we don't. But we don't have to. Let them do all the fundamentals. Let them decide where there is something that has true value that they want to buy or that is overvalued and they want to sell.
And just to elaborate a little bit on that, on the last segment we talked about making mistakes you don't even know you're making. What type of skill do you actually have to build a real opinion and in whatever you're looking at? So even if you're doing some analysis and looking at a stock company or whatever that is, how do you even know what you're saying is correct? Because you just don't know.
You don't know.
So let them do the work, and then you use price charts to identify where are they buying and where they're selling.
And that's the technical part of it. We teach you how to read a price chart so you can identify an area, we'll call it a band or a zone, where the institutions are more likely to be buying, and a zone or band where they're more likely to be selling. So, that's a combination of the two, but let's keep it simple. Let's just really concentrate on the only thing that is factually important in trading and investing, and that's what moves price, and then how far is it going to go. And the how far is it going to go part, that's a profit. You want to make sure that there's enough profit for you to put your money into a particular trade. We can also show you how to identify that. But in order to do that, you have to be able to find not only where the institutions are buying, but where they're going to be selling. And there has to be enough of a distance between the two to provide a decent profit for you. And then know how to take that profit. One of the mistakes people make is that they don't know how to do that. They either take a profit too soon or they hold on too long and all of a sudden it's gone.
Yeah, and what Al is alluding to with these zones is an area of interest. It's an area of buyers or a seller. Let's take a demand zone, for example. If you have a whole bunch of people, institutions, banks, public, everybody trying to buy a certain stock, and there's more demand than supply, price has to go up. It's just how everything works in our everyday life. You look at the home prices when there was so much demand out there and there wasn't a whole lot of inventory. That was the talk on TV. Not enough inventory for the buyers. The prices shot up and up and up, just like Cardi B sung, up and it's up, and then now it's stuck up there, right? Because now prices really haven't came down a lot. So that was a good song there, wasn't it? That being said, now once you have that zone, then with that zone you've actually identified your risk, right? You want to keep that risk small, and then your profit much, much higher. And that's an actual strategy. Al said at the beginning of this segment, you got to have a plan, a trading and investment plan. And that's what your plan has. Where you want to get in, where you want to get out, your capital management, keeping your risk small, your profits higher. And then when you do that consistently over and over and over, you don't have to be right every time because the math works itself out. Let me just rephrase that. You don't have to be a math genius, because I mean, if you can add 1 plus 3 or 3 plus 1, you can trade and invest, because it's very simple as far as the math part of it. So don't worry about that. For those of you like, oh, I don't know math, the computer does it all for you. That's nothing. So once you have that strategy, you add some odds and probabilities. Now you have yourself a business. And that's what a lot of people want to do, is trade like a business. You don't have to create a business. You need to trade like one, which is those institutions and banks. So to come into one of these trading and investing classes, well, we're going to show you how this works. We'll illustrate how supply and demand works on a price chart, what that demand zone looks like, what that supply zone looks like, what that capital management, how that actually looks, and how do you protect your positions. Just text the word investing to the number 210-210 for 2 seats for a trading and investing class near you. Text investing, by the way, these are local. Text investing to the number 210-210, or go to tradingacademy.com and you can pick your own seat and date there. Al, we got a lot more to discuss. I want to talk about what trading and investing actually looks like, and I want to inspire people to do things not new, maybe just a little bit different. This is Josh and Al, Investing and Trading Live. We'll be right back. All right. We will stay live on YouTube, in case you're wondering, Al.
Okay.
I know you were wondering.
Yeah, I was just wondering that same thing.
Oh, good. Good thing I told you then, right? Okie dokie. If we have any live YouTubers, feel free to type any questions in the chat. We can cover any questions as we're going here. Good morning. How are you doing? Okay. Are you ready, Mr. L? Do you have anything Pacific or specific?
Not specific, other than maybe mentioning the significance of retirement planning.
Ooh, retirement. We haven't talked about retirement yet. Have we? Boy, important topic that we just have not covered. Well, it's a good thing this is an hour-long show.
Well, we could easily make it a 3 or 4 hour show.
We could. Mobile token, 12% up. Woohoo! I like to see that. I like to work it. Ooh, got some opportunities I got to get into. All right, here we go. Segmente numero 4. Here we go. Welcome back to Investing and Trading Live, sponsored by Trading Academy. Once again, I am your host, Josh Lilquist. On the last segment, covered some topics on how to be more consistent trading and investing. And what it comes down to is having odds, probabilities, having a trading and investing plan, and then following through that plan, which is a consistent strategy. And now, well, guess what? You are trading like a business with those institutions. And that's the key, is trading with those institutions at supply zones, selling there, and demand zones, buying there, buying with the smart money. And one of the great things about this is, as a small trader or investor, as the public, a retail investor, we have a built-in advantage over the banks and institutions. Peter Lynch has that quote, if exploited, the retail investor has a built-in advantage over the banks and institutions, and it's really because they can get in and out of their positions at a snap of a finger. Banks, institutions, when they're buying millions and billions of dollars worth of a stock or whatever they're buying, they just can't buy it at one particular price.
Correct.
So they call it scaling in or scaling out. That's what creates those zones. They call them blocks. That's what we need to identify as a retail trader or investor, is where those banks are buying and selling. We have trading and investing classes to show that to you, to illustrate how these banks and institutions are buying and selling, how to make smart investing decisions within those income accounts and retirement accounts, which we're going to talk about next. Simply just text the word investing to the number 210-210 for 2 seats for a trading and investing class near you to get started. By the way, this is a local physical class. It's a place you can go. Yes, we do have a physical facility here, right here in Bloomington. We've actually been here since 2010, and helping people just like you make smart trading and investing decisions in those trading accounts and those retirement accounts. Text the word investing to the number 210-210 for 2 seats for a trading and investing class, one for you and a friend. You can also go to tradingacademy.com to pick your own seats there. We love our subscribers and followers on the podcast. Make sure to follow the podcast Investing and Trading Live on Apple Podcasts, iHeartRadio, and Spotify. For those of you that are watching the YouTube live, we appreciate all the questions coming in and the likes, by the way. So with all that said, we have retirement as a very important topic every single day, because somebody is either retiring, wanting to retire, or planning to retire every single day. And we're seeing a lot of people, Al, that are coming to these trading and investing classes that are planning for retirement, or they've just retired and they want to be able to continue that same lifestyle that they've had in their working years. But then the good thing is they're not actually having to go to work. So being able to maintain that lifestyle, you have to have a strategy that's, I don't want to say hands off or passive, because that can be misleading. But that's kind of what it's like.
Okay.
The computer actually executes things for you. So that's kind of what trading and investing looks like. You place your investments and then you let it work for you. Now, I want to talk about on the retirement side of things, because I know you've worked with a lot of people planning to retire, and I have as well. And one of the key terms and key things that we hear is, well, I don't want to have a full-time job doing this. And by the way, you should not trade or invest your retirement accounts full-time. It's not a full-time type of deal. It's management. I mean, think about this. You're managing your wealth bucket. People are afraid to do that because they just don't know what to do. So how do you help people build a plan for retirement, but also a strategy that's designed to let their money work for them?
Well, you mentioned a couple of things there that's important. You mentioned the word time. When you go into retirement, I mean, you've worked hard, maybe for 30 or 40 years. You want to enjoy the time that you have left, which is, by the way, a depreciating asset, maybe the most valuable asset we have. So how do you do that but still benefit from these markets without... I'm going to say that most people that have money in a retirement account have their money in something that is not going to give them the greatest benefit. They're in something that is subject to full market corrections, market crashes. It's limited as to the upside, and they're paying fees, all those things. And we talk about that in these classes. But how do you do this? What if there was a strategy that allowed you to draw cash out of the market, whether it was going up, down, or sideways? And what if there were strategies that allowed you to grow your retirement savings at the same time you were drawing cash out of the market? Would it be worth your time to learn what those are? That's what we do. That's one of the things that we cover in these classes. We talk about retirement accounts. We talk about what the drawbacks are to what you might be using now, what Wall Street has basically put almost everybody into, and how you can get better returns. One of the things you want to eliminate are the fees. And another thing that you want to make sure you have is the ability to have access to things that are going to be more beneficial for you. And one of the things you mentioned, that one of the advantages we have over Wall Street is that they have such large amounts of money that they put into a position that they can only do it incrementally. Well, let's say they get a full position, and their positions sometimes are $10, $15, $20 billion in one position. So when the number one thing they have to do is protect those positions, and that is, every Wall Street pro out there will tell you that is their number one concern. Their number one goal is to make sure that they're managing their capital so when they have a profit, they don't lose it. So how do you do that in retirement? A lot of you, unfortunately, are in retirement portfolios that have limited to no ability to have that kind of protection. So we want to talk about that with you, show you how you can have protection, show you how you can basically have what's the equivalent of an insurance policy on your portfolio. These markets that we have seen have been going pretty much in one direction for a while, and that's up. They will not continue to do that forever. Something is going to happen that's going to cause a pullback, even just the market being overbought and people wanting to take profit. There's going to be a pullback of some sort. You want to make sure that not only are you not losing money when that happens, but what if there was a way of having your retirement account structured so that when the market went down or sideways, you were actually benefiting, not just waiting for the market to go up. And the last thing you want to have happen when you retire, or the year before, a couple of years before you retire, or the year or two after you retire, for your portfolio to take a big hit, say with a major correction or a bear market. Happened to a lot of people in the year 2000, happened to a lot of people in the year 2007 that thought they were set for retirement, and all of a sudden, in the next year to 2 or 3 years, they realized that they couldn't retire, they had to go back to work, or certainly change their lifestyle. We don't want that to happen to you, and it doesn't have to happen to you, but you need to look at that, whatever you have in retirement, look at that as being yours. Don't let somebody else take any part of that. So know how to manage it, know how to make sure it stays with you, but also instead of just pulling money out of a retirement account and watching the kind of pile of money you have dwindle down, why not watch that pile grow while you're still taking money out, so you're generating income off of it, and you're growing it at the same time, and at the same time you're taking money out.
Yeah, one of the great things about trading and investing, and what Al is talking about, is right now, we have probably one of the best opportunities that we'll probably never see again in our lifetime. I'm just speculating here, because yes, markets are surging to the upside. That's a great thing if you're planning to retire. It's a great thing if you're retiring now. That's a great thing if you just retired. That's the opportunity that we know is there. But the biggest opportunity that we'll see is being able to protect those gains.
Yep.
But you can't protect them after it's happened, because if they disappeared, you can't protect it. Just like having you have your house, right? You probably want to have your security system somewhat, that's somewhat protection, we'll call it, makes noise and stuff if a burglar comes in. But you want to have that before you have a problem. Just like, yes, it is wintertime here and it is going to snow here again. Well, most likely. I know last year we didn't get much snow, but we know it's probably going to snow at one point. You got to have your snowblower ready, got to have your shovel ready, and I'm assuming most people here in Minnesota have that ready. Do you have protection on those retirement accounts? Do you have a plan to continue to ride this wave to the upside and have these great opportunities and not miss them on the downside? Not being able to, if you miss the opportunity when these markets go down to actually buy stock at a discount again, now that is where wealth creation is made, generational wealth. That is the opportunity that I can't wait for.
Good.
And with these markets going to the upside, you know what? Opportunities and upside, we know what that is. Learn the strategies to profit as it goes down. Take advantage of that, because if you feel like you're behind, markets do go down 3 times faster than they go up. So that might be an opportunity to play a little bit of catch up, and then being able to have generational wealth opportunities to buy stock at a discount. So we have 3 opportunities no matter which way this market goes here. So I want to invite you and inspire you to take charge. Take charge in those accounts, those retirement accounts, 401ks. We're seeing a lot of people that are doing that right now because they're planning and they know they got to continue that into retirement to live the lifestyle that they want to live. Simply to come into a trading and investing class, text the word investing to the number 210-210, and that's for 2 seats for a trading and investing class right here in Bloomington or all across the metro. Or go to tradingacademy.com. That's TRADING, tradingacademy.com. Al, hit them up with today's OTA tip of the week.
Well, we see a lot of people that accept where they are and just feel it's due to bad luck or negative circumstances. Just remember, we're not given a good life. We're just given a life. We're not given a good life or a bad life. It's up to us to make it good or bad. Our old friend Charlie Munger, Warren Buffett's right-hand man, said this, quote, "Those who keep learning will keep rising," end of quote. Knowledge is an asset that compounds over time. The more you know, the better you think. And when you make better choices, you can achieve great consequences. So if you want to do anything, you have to dedicate the time. There's only 24 hours in a day. You can't make more time, so use your time wisely.
Basically, just like Vader said, one of the old WWE stars, now is the time. It's time. It's time to get in the markets, and it's time to take advantage of these great opportunities. Text investing to the number 210-210 for 2 seats for a trading and investing class. This is Josh and Al, investing and trading live. Retire young, my friends.